Welcome everyone. I would like to thank you all for the support that you are giving to the channel. So guys, thank you very much. So in this video, I will be answering the mock exam from Milpark Education. So I will be focusing on section B. As you can see here, we have section B. And I will do question 2 of section B, which is out of 15 marks. So guys, before we get into the details of the question, let us first read the required section. So under required section, we are required to prepare the following accounts in the general ledger of Big Boyas Traders for the month of March 2016. So they want us to prepare the bank account payables, purchases account, and equipment account. So guys, these are 3 accounts that we're going to be preparing in this question. So now let us read the information that is provided in this question. So the following journals appeared in the accounting records of Big Boyas Traders. So we are given the journals. So the first journal that is given is the cash receipt journal, which is known as the CRJ. So guys, we have the CRJ. So remember, in the CRJ, we record all the cash that the business received. So every time when the business receives cash, we record that in the CRJ. So we have the CRJ. So we received, so let us quickly analyze this. So on the 10th of March, we received 26,000, which was deposited into the bank from a Milcom. So this is one of the client of the business. So he made the payment to the business of 26,500. So the moment or the date we received this, we decided to record it on the receipt book, cash receipt book. And on the 16th, we received 34,500, which was deposited to the bank account of the business, and this related to cash sales. And then on the 20th of March, we received 3,500 from BPP Bank. So this relates to interest. So we received the interest from the bank. So the balance or the amount of the interest that we received is 3.5. And on the 25th of March, we received 9.5, which is related to cash sales. So guys, the total amount that was deposited into the bank during the month of March is 74,000. So guys, in this journal, we record all the cash that we received during the period or during the month of March. So now I hope you understand the CRJ. And then another journal that is given is the cash payment journal. So in the CPJ, we record all the payments that were made by the business. So all the payments are recorded in the CPJ. So on the 11th of March, we made the payment of 18,000 to Shop Kits. So this relates to purchases. So we're purchasing some items and we paid 18,000 cash. And then on the 17th of March, we made the payment of 45,000 to ABC Limited. So this is in connection to equipment purchased. So we purchased the equipment for 45,000. So this was paid for in cash. And then on the 27th of March, we made another payment of 6,700 to Lion Limited. So we were settling the balance that we were owing. So how do I know? Because we have this column here, account payables. So if we have account payable, it means we were settling the balance that was outstanding to one of our creditor. So the total amount that we paid during the month of March is 69,700. So this is the total amount that was paid during the month of March, 69,700. And then we have another journal. So we have the CJ, which is the creditors journal. So creditors journal of Big Boyas Traders. So this is CJ. So guys, in the creditors journal, we record all the items that were purchased on credit. So any item that we purchase on credit, we record it in the CJ, creditors journal. So on the 1st of March, we acquired the equipment, we purchased equipment, and this was not paid for in cash. So this was acquired, or this was purchased on credit. Hence, it is recorded in the CJ. So the amount that we are owing for this equipment that we purchased on credit is 150,000. So this was purchased from Galaxy Stores. So now we are owing these guys now. So we are owing Galaxy Stores because we have acquired equipment from them and we haven't paid them. And then on the 15th of March, we acquired, we made purchases. So these purchases were made on credit. So these purchases were made on credit. We haven't paid for these purchases, for these items, with this balance of 10,000. So these purchases were made on credit from Lion Limited. So the total amount, or the total balance we are owing, is 160,000. So do we have another one? No. So now we have additional information. So here we are given the opening balances. So these are balance at 1 March 2016, so beginning of the month. So we have the bank balance. So this is favorable because it's a debit balance. So guys, a bank balance can be favorable and can also be unfavorable. So if you are told that the bank balance is sitting on the debit side, it means that the balance is favorable. And if you are told that the bank balance is sitting on the credit side, that would be an unfavorable balance. So in this case, we have a favorable balance of 16,000. So this is the balance available at the beginning of March. And then account payables at the beginning of March, the balance is 14,300. Equipment balance at the beginning of March is 67,000. Mr. Malcolm, which is the debtor, had the balance of 35,000 at the beginning of March. Okay, so now we have read all the information. So now let us do the bank account. So we're going to do the bank account first. So we have the T accounts. So we are given the T accounts in the answer booklet. So guys, the first one is the bank account. So we have the bank account. So guys, in terms of debit and credit, we know that this is an asset account, right? So bank is an asset account. In terms of accounting elements, this is classified as an asset, and we know that all assets increase on the debit side. So we have debit and credit side. So all assets increase, or they are positive on the debit side, and they are negative on the credit side. Okay, so we have debit and credit side. So this is an asset. So maybe I should indicate here. So this is an asset. Bank is an asset. So all assets are positive on the debit side and they are negative on the credit side. So now the first thing that we're gonna disclose, or that we're gonna record here, is the opening balance. So do we have the opening balance? So yes, we do have bank opening balance. So on the 1st of March 2016, the balance that was available in our account, bank account, is given 16,000. So this is the opening balance, and it is a debit balance, meaning we're gonna record this opening balance on the debit side. So we're gonna write the dates, 1st of March. Okay, so 1st of March. So we have the balance at the beginning. This is balance brought down. So meaning this is the opening balance. How much? 16,000. And then guys, this is the bank account, which is an asset. So now we should ask ourselves, what can make our bank balance to increase? So our bank balance will increase when we are receiving cash. So we're gonna have total 6. So this balance, we take it from the CRJ. So all cash received are recorded in the CRJ. So now we are going straight to the CRJ and confirm the balance, or the total, from the CRJ. So here is the CRJ. So the total balance that was deposited into our bank account is 74,000. So during the month of March, the total amount that was received by the business and deposited into the bank account is 74,000. So these balance, this balance of 74,000 will cause our bank balance to increase, because this is, or this relates to cash that we have received as the business. So now our bank balance will increase because we have received a total of 74,000. And then what makes, or what causes our bank balance to decrease? Obviously, our bank balance decreases when we are making the payments. So total payments will be recorded on the credit side of the bank account, because all the payments made, they reduce our bank balance. So guys, these are outflows. When the money is going out, our bank balance is getting reduced. So on the credit side of the bank account, we're gonna have total payment. So all the payments that we make, they reduce our balance. So we're gonna take this total from the CPJ, cash payment journal. So we do have the cash payment journal. So the total balance that was paid during the month of March is 69,700. 69,700. And then guys, now we are done. We can balance off our account now. So when we balance off the account, we check which side is the biggest. So between debit and credit, which one is the bigger side? So obviously the bigger side is debit. So we're gonna put the total here. So now we are balancing off the account. So the bigger side is debit side. So on the debit side, we have 16,000 and 74,000. So we're gonna add the two balances and get the total 16 plus 74, that is 90,000. So 90,000 is recorded here, on like you record it on the both sides, 90,000. And then now this side, credit side, is short of how much? So we can see here that this side is short the credit side. So here's my highlighter. So this side is short of how much? So on the credit side, we have 69,700. So now you're gonna take the total here of 90,000 and subtract the 69, so that we get the shortfall. So the date is the end. So we do this at the end of the month, 31st of March. So balance carried down. Now let us get the balance carried down. So the balance carried down is the balancing figure, guys. So you take 90,000 and subtract 69,700. So the balancing figure here is 2,300. So now this balance must be transferred to the other side as the brought down. So the very same balance of 2,300, we're gonna transfer it to the opposite side, which is debit side, as balance carried down, which is the closing balance. So 31st of March, we have the balance at the end of the month. So balance brought down, same amount, 2,300. So guys, this means that at the end of the month, the balance that we are having in the bank is 2,300. So this is the closing balance. So this is our closing balance. So the balance available in the bank account is 2,300. And then guys, we are done with this ledger account. So I hope you understood the preparation of the bank account. Now let us do the next one. So this one is account payable. So account payable is a liability account. So guys, account payable is the same as creditors control. So but now we are using the new terms. So creditors control is an outdated term. So the new term now is account payable, but it's the same. So this one is a liability account. So this is a liability account. And we know that all liabilities are positive on the credit side and they are negative on the debit side. So obviously the opening balance here will be on the credit side. So all liability accounts, they've got credit balance. So the opening balance is going to be shown on the credit side. So the opening balance, 1st of March, balance at the beginning. So this balance is given, balance brought down. So this is the opening balance. So it is given in the question. Account payables, the opening balance is 14,300. 14,300. And then now we're going to check on our journals if we do have any column that affects account payables. So you can see here in the CPJ, we have accounts payable account or column of how much? 6,700. So now this 6,700, so this 6,700 is recorded in the CPJ, meaning this is the payment that was made to reduce the balance that we were owing. And then another one is we have account payables again here in the creditors ledger in the CJ. So the total is 160,000. Mind you, I told you that in the CJ you record all the items that were acquired on credit. So all the items that were acquired on credit, we're going to record them on the credit side of the account. So on the credit side of account payable, we're going to show. So we're going to show all purchases that were made on credit. So purchases that were made on credit. So this is as per the CJ, creditors journal. So the total items that were acquired on credit amounts to 260,000. So the balance for these items that were acquired on credit amounts to 160,000. So we're going to show this on the credit side. And then we ask ourselves, were there any payments that were made to creditors? Yes, I've shown you one. So do you remember the 6,700? So this 6,700 is the payment that was made to one of our creditors. So that is Lion Limited. So how do I know that this is a payment that we were making to reduce the accounts payable? So I know this because the 6.7 is recorded in the CPJ. So in the CPJ is where we record all the payments that we make to different parties. So one of the parties that we made the payment to is Lion Limited, which happens to be one of our suppliers or creditors. Remember, you can even check the date here. On the 15th of March, we can see that we went to Lion Limited to purchase these items. So they are not specified. So these items, we purchased them on credit because they were initially recorded in the CJ. So these items were acquired on credit on the 15th. And then now on the 27th of March, that is after. So on the 27th of March, we had another transaction with the Lion Limited. Remember, the Lion Limited is the one that supplied us with these purchases worth of 10,000. So now on the 27th, we are making the payment to them of how much? 6.7, meaning we were settling the balance. So we were owing these guys 10,000, and on the 27th of March, we then decided to pay them 6.7. So we haven't settled the balance in full. So we have paid, so far we have only paid 6.7. So now because we've paid them, the balance that we are owing to these guys is now being reduced because we have made the payment. So when was the payment made? The payment was made on the 27th of March. So on the debit side, we're gonna record this. So 27th of March, we made the payment. So every time when we pay, bank is affected, right? So on the details, we're gonna put bank. So we made the payments. All the payments are recorded in the CPJ. So how much did we pay? We paid these guys 6.7. So because we have paid them, the balance that we are owing to these guys is now being reduced. So now the next step, we balance off the account. So now we know the procedure. When you balance off the account, you first check the picker side between debit and credit. You determine the picker side. Obviously, in this case, the picker side will be credit side. So on the credit side, we have 14.3 and 160,000. So the total is 174,300. So the total you record it on both sides, 174,300. So this is recorded on the both sides, 174,300. And then the balancing figure will be on this side, will be on the debit side. So debit side is short of how much? So we're gonna determine the balance carried down. So the first March. So now we're gonna determine the balance carried down. So this one is calculated as the balancing figure. So now you take the total of 174,300, you subtract 6.7. So the balancing figure is 167,600. So guys, this is the carried down, and we know the principle, the carried down must be disclosed on the opposite side as brought down. 31st of March, we have the closing balance, which is balance brought down, 167,600. So guys, how do we interpret this? What is the meaning of this balance, 167,600? So what is the meaning of this balance? So this means that at the end of March, the balance that we are owing to our creditors is 167,600. So this is the balance that we are owing. Remember, the total balance before we made the payment of 6.7, we were owing our creditors a total balance of 174,300, because at the beginning we were owing 14,300, and during the month we made credit purchases to the value of 160,000. So now the total balance that we are owing to creditors is 174,300. But because we have decided to make the part payment of 6.7 to our creditors, so this has caused the balance that we are owing to be reduced. So the balance that we are owing was reduced from 174,300 to 167,600. So guys, I hope this is making sense. So the balance that we are now owing to creditors is at the end of March is 167,600. Then the next account that we're going to be doing is purchases account. So guys, this one is an expense account. So this is an expense account, and all expenses increase on the debit side and decrease on the credit side. So expenses, they've got debit balance, so they are positive on the debit side. So every time when we make the purchases, we're gonna show that on the debit side. So now, do we have purchases that were made during the month of March? So purchases, yes, we do have. So you can see here in the CPJ, we have purchases column. So purchases that were made for cash amounted to 18,000. So 18,000 related to purchases that were made for cash. So every time we make purchases, we record that on the debit side. Why? Because all purchases, they've got debit balance. All expenses, they've got purchase, they've got debit balance. So guys, purchases account does not have opening balance. So there's no opening balance. So we just record this. So the date is very important. So these cash purchases were made on the 11th of March. So on the 11th of March, we made purchases and we paid cash, so bank is affected. So this is recorded in the CPJ, and the amount is 18,000. Do we have any other purchases that we made? Yes. So we have purchases of 10,000 which were made on credit. So these were made on credit. So the date of the transaction is 15th of March. So on the 15th of March, we made another purchases, and these purchases on the 15th of March, they were made on credit. How do I know? Because they are recorded in the CJ. Remember, in the CJ, you record all items that were purchased on credit. So meaning these purchases, they were purchased on credit because they are recorded in the creditors journal. So under details, we can write creditors control, but the term is outdated. So the new term for creditors control is accounts payable. Accounts payable. So this is recorded in the CJ, creditors journal. So the value of these purchases is 10,000. And then these are only purchases that were made by big boys traders. So now we can close off the account now. So we can close off the account. So the bigger side here is debit. So 18 plus 10, the total is 28,000. So we have 28,000. So we show this on both sides. 8,000. Then at the end of the month, so this one, guys, for purchases account, we don't determine the carried down, but we transfer the balance to the account that is called trading account. So I will show you. So this is at the end of the month, the 1st of March. So now this balance of 20,000 is transferred to trading account. So this is transferred to trading account. And we're gonna show this in the general journal, GJ, general journal. So the total is 28,000. So I hope you see. Always, guys, when you prepare this account, you don't show the carried down. As the balancing figure here is not the carried down, but the balancing figure is transferred to trading account. So this is how we deal with the purchases account, which is an expense. And then the last one is the equipment. So guys, this one is an asset. Equipment is an asset. We know that assets are positive on the debit side and negative on the credit side. Obviously, the opening balance will be on the debit side. So 1 March. Show the opening balance. On the 1st of March, we're going to have the balance at the beginning. So this opening balance is given in the question. So equipment, the opening balance is 67,000. $7,000. And then we ask ourselves, did we purchase any other equipment during the month of March? So we check on our journals. We're going to check on our journals, especially the payment journal and creditors journal. So in the CPJ, we can see here that we have equipment that was acquired on the 17th of March. So on the 17th of March, we acquired the equipment. And this was purchased using cash because bank was affected. So 45,000 was paid from our bank account. to the supplier of the equipment, APC Limited. So this payment was made for cash, 45,000. So now our equipment will increase. So the value of our equipment will increase. So every time when our asset increases, we show the effect on the debit side. So the date of the transaction is 17th of March. 17th of March. So the equipment was purchased for cash. So bank is affected. And the folio is CPJ. So this is recorded in the cash payment journal. And the value of the equipment purchased is 45,000. And then there is another equipment that was purchased, but this one was purchased on credit. How do I know? Because this equipment worth of 150,000 is recorded in the CJ, in the creditors journal. Guys, anything that is recorded in the CJ is acquired on credit. So it means that that item was acquired or was purchased on credit. So this equipment is recorded in the CJ. So it means the equipment was acquired from Galaxy stores on credit. And the value of equipment is 150,000. So now we're gonna have more equipments because we have acquired one on credit. So our equipment or the value of our assets equipment is increased. So the date is 1 March. So this transaction took place on the 1st of March. So this equipment was purchased on credit. So anything purchased on credit will be shown as account payable. So accounts payable. And the folio will be the CJ, creditors journal. So the value of the equipment is 150,000. And then we are done. So if there is a, like a transaction which says the company decided to sell one of its equipment, then we will record that on the credit side as asset disposal. So if the company decided to dispose of, to sell the equipment, that will reduce the value of our asset, isn't it? So anything that reduces the value of asset is shown on the credit side. So in this question, no asset or no equipment was disposed of. So there is nothing that we're going to show on the credit side. And we are not told the depreciation information of of the assets. So maybe if we were given the information on depreciation, we know that depreciation reduces the value of the assets. So if we were given the information to calculate depreciation, then we're going to calculate the depreciation and record it on the credit side because the depreciation reduces the value of equipment, of assets, reduces the value of assets. So in this case, our asset is equipment. So, but that information is not given. So we're gonna close off the account now. So we are closing off the account. So opening balance is 67,000. And then equipment purchased for cash, 45,000. Equipment purchased on credit, 150,000. So the total is 262. 262,000. 262,000. So now the balancing figure would be shown on the credit side. So 31st of March. Now we want to determine the balance carried down. So balance carried down is the balancing figure. So on the credit side, we've got nil. So nil minus the total, obvious. We're gonna be left with the total of 262. So 262 minus 0 because we've got nothing recorded on the credit side. So we take the total of 262 and we subtract 0 or nil. So the total would be 262. So this is the carried down. So we know the principle, the carried down must be shown on the opposite side as the brought down. 1st of March. Have the balance brought down. 262,000. So guys, we are done with these T accounts. So thank you very much.